border faster. Boom, going to the max. No, I'm going to the max. No, I'm going to the max.
Thank you for having us today. I'd like to welcome Jamiel, Sheikh, and Wilma Matilla. Without further ado, why do we have a self-introduction? I'm Rico Pang from Sanctum. We are a VC incubator, and also we are also from Unity Ventures. Jamiel, why don't you start with introducing yourself?
Sure. My name is Jamiel. I'm from New York City. I do several different things. The introduction was slightly incorrect. I run 3 organizations. One is called Chain House. We do blockchain, Web3 education, and software development. That company's based in Vietnam. And then I run something called a Cbdc think tank. We engage with several different central banks around conversations related to Cbdc implementation and research, including the IMF and banks in Asia as well. And then I run a startup called Instament, which is a B2B NFT enterprise API. I run the largest blockchain community in New York City. I'm a professor at Columbia Business School and 3 other universities. And we are currently writing a book, my second book. I wrote a technical book called Mastering Corda. Now I'm writing another book for Columbia University called Finance 3.0.
Thank you, Jamiel. And Wilma?
I advise Techstars, as mentioned this morning, as well as run a venture fund and run a layer 1 called FIRE. In addition to that, I have been involved in the European working group of central bank digital currencies since 2017, and that's it.
Thank you. So, what is the current state of the CBDCs worldwide? Like, what do you think about it? What has happened in the past? Would you like to share some of the latest element of it, Jamiel?
Yeah, sure. There's an enormous amount of interest in CBDCs from central banks and academia as well. Roughly around 90% of the global GDP in terms of central banks are engaged in central bank digital currency research, work that they're doing, and many central banks are not publicly disclosing the work that they're doing. Most of the banks are taking this very, very seriously. Some banks have already produced a CBDC and brought it to the market, and many of the larger banks are still investing. They have a budget this year. We know many of these banks are increasing their budget and allocation into research into CBDCs next year. So we do see a significant uptick, and this crypto downturn is actually accelerating the investigation into CBDCs, the investigation of DeFi and CBDCs, and how a CBDC could possibly be implemented. Now, a CBDC has different implications in different regions. A CBDC is not a single type of technology. It's not a single way of doing things. A lot of countries are exploring what a CBDC means for them. For example, let's say in Vietnam versus the US, a CBDC will look entirely different. So the work that's occurring now, what is clear is that CBDCs are inevitable. They're coming. It may take 5 years, 10 years, but they're on the way. And part of the work that we're doing is helping central banks understand what blockchain is, if it's applicable to CBDCs or not, or what DeFi is, and if it's applicable to CBDCs or not. And we see significant interest from these central banks in trying to understand Web3 and all of the technologies that we love to talk about.
Great. So, Wilma, which country launched CBDCs first, and what is the goal of CBDC? Would you share some about that?
So from the smaller countries, Bahamas as well as Jamaica has already launched, as well as Nigeria. China has had extensive pilots in the city of Shenzhen, anchoring 5 million users of CBDC in restricted sandbox area. In terms of development and implementation, as mentioned, CBDCs are already present in research or proof of concept states in over 100 countries currently. For example, European Union itself has been building digital euro since 2017, and notable progress has been observed in US, Sweden, Kazakhstan, as well as a few other nations. So in terms of the objectives, obviously the core aspect is to give financial inclusivity. So as you know, here also in Philippines, 46% of the population don't have access to banking. So it's half of the population don't yet have access. Eliminate that, give access to banking, decrease money laundering, increase transparency, increase speed, increase visibility of transactions, and so on. So the benefits are notable. Maybe Jamiel can tell us a little bit more of the benefits.
Yeah, I think so. You hit the main points around financial inclusion. I think there's one or two additional points. Some are not obviously said in the media, but a CBDC is tied to hegemony, or it's tied to the survival of a state. So if a CBDC is something that a central bank can issue, it may protect the existence of that state from let's say, cryptocurrencies, but potentially eroding its monetary policies capability. So central banks typically use monetary policy to stabilize a country, and if another form of a currency comes into play and the public is using that, let's say, for example, using stable coins, then that can potentially disrupt the stability of a country. And so countries are looking at CBDCs as a form of, one, hegemony, which means maintaining global power, and then two, financial stability for the country itself. And then from a practical point of view, from let's say a retail point of view, some of the benefits of CBDCs includes interoperability. For example, in the US, you have payment apps like PayPal and Venmo. You can't move money between those two apps, right? I have a bank account, I have a balance in PayPal for $1,000 and I have a balance in Venmo for $1,000. I can't move the money between these two apps. With a CBDC, that is potentially possible. It's more fungible. I can move money across different fintech applications. But a lot of the benefits around CBDCs and some of the negatives of them are still being researched and being evaluated.
Great. So a lot been discussed about the CBDCs in terms of government and what can it bring changes to the people. But coming from the people's point of view, in terms of privacy, there's a lot of debate around privacy issues versus CBDC. It's quite an issue. So what is your opinion about this privacy versus CBDC sort of thing?
Ironically enough, the benefits are the same than the concerns. So, for example, in terms of privacy, we of course get transparency, but then on the contrary, privacy challenges have been arising due to government having visibility to every action you do worldwide, wherever you do them and when you do them and how much are you spending money, as well as, of course, they have easier access to taxation, which is definitely not bad. However, they can monitor your daily habits as well as intervene your privacy in every sector of your purchase habits and behavior.
Yeah, so privacy is one of the main reasons there is challenges to CBDCs, where there are certain groups of people that are saying, hey, CBDCs are not the right thing for society. It was a group of central bankers and a few of us, we launched something called CBDC Manifesto. If you go to cbdcmanifesto.com, see 5 principles that we laid out that we believe all CBDCs must adhere to. And at the top of that is privacy. So the nature of privacy, first of all, it's very difficult to define privacy. Like, what does it mean for something to be private? When you go to the store and you buy milk with cash, that transaction is public. Anybody watching you in the store knows that you made that transaction. So is that a private transaction? Where is your privacy in that? So first, the problem is, well, how do you define privacy? What is really the effect of privacy? Can I arrive using metadata about your activity, your private activity, and arrive at conclusions about your spending behavior? Is that an invasion of privacy, or is that a legitimate use of data? So the general fear is the central bank will issue a token, a CBDC, and that token, you'll use that token to buy whatever you want to buy, and all of a sudden, they're fully aware of what you're buying and are able to make decisions based around that. But there are arguments against that. First of all, central banks don't really care what you buy. They're not really incentivized, or their organizational mandates are not structured around understanding the consumer. What they do want to understand is how money is being used, how much of it is being used, the turnover, and how to balance, let's say, inflation and the growth of the company. So, growth of the country. So, central banks generally are not very interested in the fact that you bought something from Victoria's Secrets. It's not really their concern. It's more of a concern of a fintech company that is, you may be using a mobile app that you're using for payments, and they will know and want to know where you're using the money, if you're using it at a Victoria's Secret or using somewhere else.
Thank you very much for that. Last comment, Wilma.
And not just individual privacy, but also intergovernmental privacy between other governments, seeing the operation and purchasing power directly of further nations. So there are still steps that we need to work on, but definitely the benefits outline the challenges.
Thank you very much, and thank you for having us today, and thank you for Jamiel and Wilma for today's session. Thank you very much.
Thank you.
Philippine Blockchain Week. See you next year.